For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. We've had a couple of very explosive day 2 trade opportunities in the U.S. session. The Asian session provided traders with some opportunities on the yen, New Zealand, Aussie dollar, gold, and London session traders had excellent opportunities for high of the day trades on British pound, euro. We'll review some of those. Myself, I found a couple of trade setups in the US session, reluctant to hold on through the entire move. Congratulations to the traders who nailed oil. I'll talk about the oil trade and the second leg, and also the first hour of the U.S. session, trapping up high. Bit of volatility, but some traders nailed that trade, and it's currently on a 200 plus pip run. So coming back to the basic premise. Again, I talk about day 1, day 2, day 3 type of setups. That can be 3 sessions sometimes. That can be Asia, London, New York. But the previous day's high and low often are where we will find day 2, day 3 trade setups. So often the market may break out of a level or trade inside of a level, and the next day traders are trading these moves. And I talked about this in a previous video about this. To me, is basically the matrix inside those highs and lows. Now, there are trade opportunities inside on certain days. But the basic premise is that if I'm looking for something on day 2, I want a previous day's high to be taken out, because that can give us a better opportunity than just trading stuff that's inside or random. And it may appear to be setting up for something, when in reality, if you wait for the timing windows, you'll be amazed at how many times something all of a sudden, right in the last hour prior to a session or in the last 15 minutes, it goes vertical and works up into a high or into a low. And that can be our day 2, second hour or first hour can provide a trade opportunity. And in some cases, we may see that just be a 25 or 50 pip trade, especially if it's in the US session. But in other cases, as we saw today on oil, we saw big peak formation, short squeeze, and that market went up and broke structure just prior to the US 12 candle window, brought volume back up high again, and dropped down, or is dropping down in towards the peak formation breakout from yesterday. So we'll take a look at that. But again, just understanding the 3 sessions, 3 days, it's all the same concept. The idea is to get traders trading what they perceive to be the trend. And volume gets caught. That's the same applies for a long trade. We can see markets creeping down into a low. And in some cases, as we saw in gold, people are looking for the reversal, and gold continued to move lower. And we'll look at that as well. Now, again, I talk about gold indexes, oil. I look at the major quarter levels and the previous day's high and low. So ignoring what we perceive to be the pattern, again, I talk about prices in a box. And in this particular case, it's a 250 pip box, except that the previous day's high extended outside of that range. And so in pursuit of either continuing that move or triggering breakouts or hitting stops, the market traded up into that level without breaking through. And again, we have our low of the day, which forms our boundary on the other side. When we take a closer look, we also see that the market had three levels of rise: 100, 100, and 100. Now, the areas outside of this 100 pip box, again, traders ask, how do I know the higher or the lower locked in? I don't know, but it comes back to timings. And also, I view outside of these areas as the peak formation. You'll notice that the peak formation traded up into 50 in the London session. And the previous day, the market traded below double zeros down to 25. The pins went down to 25, but for all intensive purposes, they went 50 pips below the double zero box and pinned down into that level 1 before reversing on the short squeeze yesterday. So we had our three levels of rise: 100, 100, and 100. Peak formations into the previous day's high, pinning through 50. And then the breakdown in structure. Now, I was watching this set up, and it moved quicker. I was expecting a 9:30 New York Open potential trade setup. And this market moved prior to the end of the first 15 minutes, which watching both was just sort of threw me off guard. But again, perfect textbook setup. Break in structure prior to the 12 candle window. The vertical stop hunt to the high of the day in the first hour. Our second hour proceeds back up into the high. And you'll notice 25 to 50 pips formed our high. They 25 pip push up into that peak formation before breaking down. When I saw this breaking down, it was already too late for me to, quote unquote, chase that move. But we followed this down. I was in the gold trade, and we'll talk about that in a second. But this pullback, this creeping trend, again, if we look at the 15-minute chart, this market had a lot of space to potentially move to. This, again, if we just talk in terms of 50% levels, this three levels of rise, 150 pips, the 50% level was a definite minimum target when this market broke down. When the market broke through the double zero box, again, this is numbers and timing. The vertical 1-2 push into the double zeros and the consolidation sideways was a trigger for me when this broke through the trap volume bodies with the bull candle. This bull candle, again, Al Brooks talks about bull candles, H1s in a strongly moving market. This was an excellent opportunity for me to continue the move. And if you follow oil enough, you know you do not want to counter trend oil until it goes into consolidation and you're confident of a trade setup itself. This trade was already in process, and there was no way, again, timing-wise, we're about to start the third 15-minute bar at the New York Open, and this market still had room to continue its move, a minimum to the 50% level, but continue down even further into the bottom of the 100 pip box. Again, it's a tight stop. We're down on level 3, obviously, in terms of the move. So this is not, we're up top, day 2, high of the day opportunity, high of the session. Fantastic opportunity. Trader Chris nailed this trade. He was up 200 plus pips at his last message. This is a sizable opportunity. Down here, we're talking about a scalp for a continuation move for 50 pips. It pinned into the 50 pip target and pulled right back. This stage, I had tightened it up to get out of the trade with 17 pips. Obviously, the market continued, and that, for me, was again, I wasn't going to continue to trade this market. Traders who did got 50 to 75 pips. I took that initial scalp, and that was my last trade for the day. Again, this is a textbook day 2 high of the day trading opportunity. So obviously this was possibly going to be a level. We sold off from this on Friday. We sold off from this on Monday. They came back up, traded into it, and broke down. And again, coming back to A tops and V bottoms. This is an A top setup. A top meaning peak formation is into the high of the day. First hour goes up. That's our A top. for the vertical move down. Tons of space. This was by far the best trade setup. Again, just wasn't on my A game today, so it is what it is. Now the short trade I took on gold, again, same thesis. If we just tighten this up to the 15-minute, again, the market made a high on Monday and a low on Monday. Somebody asked me yesterday why I didn't review gold. I didn't trade gold yesterday. One of the reasons why I did not look at gold is that it was inside. Now, obviously, there was a short squeeze in the U.S. session for 50 to 75 pips, but we did not violate any boundaries at the high or low of the day, which does not mean that there can't be a good trade setup. It was just not one that I looked at yesterday, as we had short squeeze opportunities on several pairs. And again, we're still inside. My thesis today on this trade was that we were potentially going to break down to take out the low of yesterday, inside bar. So again, the high and the low and everything inside can tend to deceive traders. So just coming back to the 100 pip box, they put a low in place and went vertical. This is the pump and dump for Asian session traders. 3 levels of rise. 3 levels of rise, the market breaks down 25 to 50 pips right off the bat in Asia, pulls back and locks in the high. So for traders who are asking, I get this question quite regularly, how do you know the high or the low of the day is locked in? Peak formations. Peak formations, and typically, especially if they've gone outside of the range, but go back and study. Asia, London, or New York are going to put in a high or a low of the day. Go back and study them. You have opportunities to study what they look like every single day. That's the high. That's the low. That's your thesis right there. High of the day, peak formation high, peak formation low, trade back into the low, explosive short squeeze. Market comes down 3 levels and goes back up into the high, beginning of the session, underneath the engulfment at the open of the Asian window for a 75 plus pip move in Asia. Some traders may have held that for the whole day. These are the sort of situations where you need to go back and study so that you understand what you're looking for in the session. So coming back to today's trade, this market had broke down and was continuing to break down, and I was looking for the follow through after a vertical move. Now we didn't get a vertical move in that last hour prior to the 12 candle window. We did not get it in the first hour until the last 15 minutes of the hour. But again, you've heard me say this before. If there is no vertical explosion, it's a trend trade. It's a trend trade. This little pump up is all you're going to get back into the peak formation at double zero. So come back to my premise. This market has broken down below double zeros. That means that when they put a low in place, I'm looking for a vertical move back up into double zeros for the continuation of the move down. We didn't get that, but we got a creeping trend down in that first 45 minutes. And you hear me repeat these numbers over and over again. Price and time. 30 to 45 minutes, a market will lock in most cases on an average day, the high and the low in the first hour. Then the market will trade back into that to lock in the high or lock in the low for a trade setup. Now in this particular case, we're already broken down. These are the levels. Okay, I got a peak formation high that's taken out at double zeros and then breaks down again. Trades up, creeping trend down, expanding the range, and then we get the vertical pump up into the high of the day, getting traders trapped thinking that this is a reversal for a squeeze. We're in day 2 inside of the previous day's inside bar range. So remember, inside bar traders, we're not triggered into the market, but this is the 3rd day. This is day 3 from the low of the week. Day 1, that's our peak formation low. Day 2 is Monday, our first day of the week. Now, I know traders get confused, but you're going to have to figure it out. That's part of the game. Day 1 is Monday, but this is our day 1 in the 3-day setup. Day 1, day 2, day 3, they go up, but they break down inside. So that tells me This is a trend trade on the inside going back to yesterday's low. That's the low-hanging fruit trade setup. Where's my trade setup? In the upper part of the 100 pip box. Now this trade broke down. My thesis was it should have broke right through 50 in the second hour prior to the New York Open for a continuation in the New York Open for either that second 25 pips or to the previous day's low. The creeping trend on the second pop-up, I exited the trade. I didn't like that setup. Obviously, it broke down. I could have held that. I didn't. Today, I just didn't feel that any real distinct, fantastic opportunity existed other than oil. But at this stage, oil had already started to run, which is why I came back when New York opened to look at how that market had moved. But I got out of this trade with 8 pips. It eventually broke down. I did not want to follow that and chase it. Obviously, it fulfilled its 50 pip range. But again, my execution today was kind of average, and that happens sometimes. It is what it is. You move on to the next trade and you try to do it better. Again, another fantastic trade opportunity existed for S&P traders. The major quarters, previous day's high and low for London traders. This was an excellent day 2, high of the day, London Open trade setup. Trap volume above major round numbers. Again, if you want to know, how do I know the high is locked in? I never know the high is locked in, but this is how I trade things. When they break down like that, the high is locked into me. They're back inside of the 00 box, which is our 1,000 pip box. They're currently trading off of 500. Go back and study. Why do you think the high can be locked in? They went vertical into the high and broke down. The high is locked in. Great trade for traders who nailed this fantastic trade. And then the premise coming into the US session, again, if we look closer at this, it already starts to run heading into the 12 candle window. And you hear me say this over and over again. Nobody gets a free lunch. Nobody. So the traders who are in this move, starting at the beginning of the session, probably had an opportunity for, we'll see in a second here, probably a 100 pip move if they traded that at the end of the London window just prior to the US session. But again, we see the 1, 2, 3 into the New York Open at the end of the first hour, right off of the 750 level, 38.75, for a 250 pip plus move straight through yesterday's US session higher level longs. We got low-hanging fruit all the way down. Again, I repeat, major quarter numbers and previous days highs and lows. This was a fantastic continuation trade for low-hanging fruit. So if we look closer, we can see again the market makes a lower high in the first hour, continues down, and finds support where it locks in the low just below the 00. So again, our 100, we drop into a new 100 pip box, and then they start the creeping trend back up above 50 at the end of the very first hour. The second hour opens up and breaks down just prior to the New York Open, and breaks through the 00 box right into the New York Open for a continuation trade. Now again, opportunity existed prior to the equity markets open. Sometimes this will happen, but we were in a broken down market. The market proceeded up 3 levels of rise into the new 100 pip box. Again, it's no matter where I am at, how many pips it's moved, it's a broken down market today. I want to work back with my 100 pip box in that first hour. They locked in a high at 75. Thesis is they could trade back up, pop the high, and break down. They didn't quite get there. They broke structure at the end of the first hour and go up into that peak formation first 15 minutes of the second hour before breaking down and continuing for an explosive 200 plus pip drop. So again, congratulations to those traders that nailed that. Price, levels, and timing. Having a thesis, and if you're inside, knowing that you're either in a trend trade, trading back to the other extreme, and not counter trending a market that has the potential to move like oil, S&P, in these kind of huge explosive trades. So looking at the euro, again, just coming back to our basic premise. Day 1, day 2, day 3, if we scroll back, we can see Friday puts in the low. Monday does not take out the low. It's our day 1, but day 2 from our peak formation low, day 1, day 2, day 3 breaks the high in Asia, goes up to 50 and pulls back inside. And Europe, London traders who were looking for a day 2 high of the day trade opportunity got that for their 50 pip which continued just prior to the US Open. This is an example again of a market at the open continuing the second leg of the move. So day 1 longs get triggered into the market. Day 2 longs. Day 1 was on Friday. That was the first day that broke a daily high. Day 1 longs are in the market. Monday's an inside bar. Day 2 is Tuesday. Day 2 longs are triggered into the market. Remember, nobody gets a free lunch. They go 25 to 50 pips outside of the 00 box. It breaks down, 50 pips stop hunt, trade, drop into yesterday's low of the day. Now we're currently in the lower 100 pip box. No idea what it's going to do, but we have day 2, high of the day trade shorts above 25. So remember what I keep saying. I don't focus on these little bars on the 1 minute or anything else. Once I have my thesis in place, the high's locked in, we trade back up into it for 30 to 45 minutes. London opens, 15 minutes false move into the high. Above 25 is where I want to get filled. There's my stop loss. My max stop is going to be the high of the session, not the high of the day, because we've already locked in the high of the day. That's the high of the session, the stop hunt back up into the peak formation. I want to get filled above 25. There's our break in structure for our A-top pattern again. A-top pattern. Some shorts may have got shaken out with the fear that this was going to come back up into them. Other traders may have recognized the consolidation before collapsing and breaking down into the low of the day. Great trade to traders who shorted the euro. Looking at the pound, we can see our peak formation low was on Thursday. We had the Friday. We had the short squeeze on Monday down into the peak formation low into 75. Day 1 longs triggered into the market Tuesday morning in Asia at the break of Monday's high. So remember, peak formation low, Monday, new week, day 2, that's our low, inside bar. They break Monday's high on Tuesday in Asia, expanding the range, breaks down inside, goes vertical in the Europe-London window back to the high for a London sell above 50. Above 50. Once they go up into the high, I'm on my 1 minute chart. Okay, so remember the thesis is that once London's trading 30 to 45 minutes back up into the high, we want to get filled above the numbers. So we don't have a break in structure until the 45-minute mark of the London equity hour. But if traders, even if they had shorted it up in here, because they were perceiving this to be the entry for the breakdown, again, your stop loss wouldn't change. It's still going to go above that high of the day, even if you wanted to put more on there, whatever, a max stop, 15 pips. But when they come back up off of the previous day's high with that higher low, notice again the pattern. We've had a break in structure. We've trapped volume above 50. They've broken down and gone vertical. There's our A-top formation. But just think in simple terms. 1 hour, 2 hours, third hour back up into the high. The third hour opens up top. We get our micro or M structure into the high of the day. So they've put a high in place They go back up into the high. We want to get filled above 50. Thesis being they're going to go a minimum back to where that move started from. This is the classic pump and dump at the high of the day. Day 2 shorts back down for 50 pips. Again, that market broke down in the last hour prior to the U.S. session. So again, a low-hanging fruit opportunity for the continuation trade for 25 pips plus for traders who were looking for that in the U.S. window. So understanding this, knowing that you can only go for shorts, I want to be selling the pop-up above the quarter level. We don't quite get that until the second hour. I'll just mark off a high bull if I can't get filled up above the numbers. So again, when you're in a situation like this, you know you're going for a 25 pip move. They put in the peak formation low first hour. They go back up into the numbers. I'm just looking for the continuation trade. We don't need a break in structure. We've already broken down. This is a continuation trade. So for the traders who keep asking about break in structure, break in structure is when you're at the high of the day for a counter trend move. So for example, the market's moving higher. I need the break in structure first before I can short that with confirmation. Same thing goes for the long trade. When I'm already in a broken down market's already broken down, we've had break in structure. This is the existing short trade already in play, the pullback and the continuation of that broken down market, if that makes sense. Canadian dollar had news on the calendar today. Again, day 1 longs were in the market yesterday for our first day of the week. No peak formation. We had a continuation trade. This market has been a strongly moving market, but what I wanted to point out with this pair is that the textbook dump and pump setup. We have news on the calendar. It's a strongly trending market. Look what the market does. Drops down into 50. Breaks structure. Trades back into 50. 3 pushes into the London Open and the continuation long in the London session. This is after we come to the screen for the US session. They've come down and locked in 50 as the low of the day. This is a dump and pump scenario for traders who were looking for an opportunity trading around the news. You'll notice the trap volume down low. The breakout back up to double zeros. Now this is the textbook setup for trapped volume, a quarter of trap volume, below zero, above 75, coming out of the dump and pump setup, heading into the news with our pin hammer. Okay, again, pin hammer, 30 minutes into the session, right at the close of this candle is the news. They go vertical. The obvious target on the dump and pump is back to the high of Monday, in line with our existing long bullish trend. That's the dump and pump back in line with the news. They locked in the low for an explosive. Now, again, I don't trade the news, but if we zoom down and we were looking for a continuation opportunity, I talk about waiting 15 minutes. And what do we get? We get our first bounce opportunity. First bounce opportunity. Beginning of the second hour. The engulfment. The continuation up to the numbers. After the news, the market proceeds to push up into the numbers, 25 pips below. Second hour opens, and we get a mini dump and pump into the breakout of that high in a strong bullish market. If you are going to continue to trade the Canadian dollar back to the high of the day. Not saying it's a perfect trade setup, but if you didn't trade the news, or if you are like me and you don't trade the news, this is the news trade itself, where our thesis is this. We're going back to the high of the day. It's a pin hammer, right? You see the engulfment. We got 3 pushes down and the pin hammer for the short squeeze continuation out of the dump and pump scenario, except I can't take this because there's news on the calendar. I won't take it. I'll wait. So in my head, I'm already in this trade. I'm already long in this trade. I'm going for a minimum of 50 pips on the 15-minute chart. This is the continuation of the existing long trade back through the high of the day. Obviously, when it gets to the high of the day, this is an opportunity to lock in profits. And when we get into the third hour, we now have 1 hour, 2 hour, and 3 hours into the high, 45 minutes, 39 minutes at the high of the day. Obviously, the market, as it moves higher on this last level, we have higher level lows. I would be locking in that money because this is low-hanging fruit, even for a stop hunt back into the quarter level. So hopefully that makes sense. Day 2 longs are in the market. Second day of the week. News catalyst continued the move back to the high of the day, but again, the dump and pump scenario, and you notice peak formation and then 1 level, 2 level, 3 levels of drop, peak formation, low break in structure, trade back into that at the Europe London Open, taking traders in the wrong direction back into the low before an explosive reversal opportunity for 50 pips, the creeping trend back down, and the short squeeze continuation on the news. So have a thesis heading into the session. Know your timing. Be aware of any news on the calendar. Keep it simple, traders. We have had some fantastic markets. I can't say I've been on my A game, but still was able to lock in 25 pips with a little bit of oomph behind it. Always room for improvement. Have a great day, traders, and may the markets go with you.